Muito bem. Depois dessas plenárias incríveis que vocês viram aí, subdivididas em cada fileira dessa de conhecimento e tanto aprendizado e troca, eu vou pedir uma atenção especial de vocês para um momento rápido, mas muito, muito importante, porque fazer o bem não importando a quem, enche meu coração, eu tenho certeza que de vocês também. E para falar um pouquinho sobre uma iniciativa que faz o bem não importando a quem, eu quero trazer aqui um instituto sem fins lucrativos. Eu quero que vocês conheçam, que ajuda a fomentar o empreendedorismo no Brasil. E quem vem aqui para o palco para contar mais sobre esse instituto é o CEO do projeto Cris Faé e o Guilherme. Bem-vindos!
Fala pessoal, tudo bem? A gente está quebrando um pouco da agenda aqui. A gente quer falar um pouco sobre o B55. Eu não sei se vocês escutaram falar já sobre esse instituto que a gente lançou fazem aproximadamente 6 meses atrás. Então, eu, Davi Vélez, que fundou o Nubank, André Street, que fundou a Stone, mais o Cris Faé, a gente se juntou e montou um instituto sem fins lucrativos que tem a intenção de ajudar outros empreendedores no Brasil a construírem histórias mais legais que as nossas. A gente sabe que empreender é uma atividade super solitária e esse instituto nosso juntou os maiores empreendedores que nós temos no Brasil. Então, temos Jorge Paulo Lemann, tem o Beto Sucupira, tem o Arthur Grimbal, tem o Alexandre Costa, João Adib, são 40 embaixadores e o que a gente faz é, a gente ajuda outros empreendedores através de empreendedores que tiveram histórias de sucesso de verdade. Empreendedores que começaram do zero, que atravessaram crise. Então, em todas as nossas aulas tem esses empreendedores doando o seu tempo e fazendo outros empreendedores crescerem e terem cada vez mais sucesso. Talvez essa seja a nossa forma de ajudar o Brasil a dar cada vez mais certo. Então, a gente acredita que quanto mais empreendedores tiverem no Brasil, mais a gente vai ter uma agenda liberal, naturalmente mais emprego, mais inovação, mais renda, mais impostos, mas é assim que a gente faz o Brasil seguir na direção certa. Bom, o Cris é o nosso CEO, juntou lá eu, o André e o Davi, 3 visionários, e o Cris é um super empreendedor, ele que assumiu a missão de transformar as nossas ideias em algo que faça sentido financeiramente, apesar de ser um instituto sem fins lucrativos. Todos os cursos são cobrados, porque a gente quer que esse instituto se transforme cada vez mais num super endowment que possa cada vez mais contribuir e ajudar o empreendedorismo a ser cada vez mais exponencial no Brasil. E a gente vai ter agora, acho que pode mudar ali, Cris. A gente vai ter agora uma conferência. Bom, se você quiser explicar, bom, explica você, se apresenta e
muito bom,
bola contigo.
Bora, vamos lá. A gente, 29 e 30 de setembro, a gente vai realizar uma conferência super especial. A gente está aqui vivendo, né, o maior festival financeiro do mundo, maior e melhor. Não seremos talvez o maior ainda festival de empreendedorismo, mas com certeza o melhor do país. Então, a gente está fazendo um convite super especial. A conferência é uma forma de materializar tudo isso que a gente tem feito, né, com muita troca de empreendedor para empreendedor, reunindo aqui nomes espetaculares. É um momento super importante, super bacana, onde a gente vai ter muito aprendizado de histórias de muito sucesso, como a do Guilherme, como a do André, como a do Davi, de vários outros nomes que estão aqui. Então, um cupom super especial, gostaríamos que todo mundo prestigiasse de alguma forma. A gente tem feito muita coisa legal, super jovem, né? 4, 5 meses de vida aí praticamente. Então, sigam a gente, acompanhem muita coisa que a gente tem feito.
Bom, o nosso instituto, gente, a missão dele mais importante, o que a gente entrega aos clientes são diversos cursos voltados à gestão e liderança. E essa conferência vão ser 2 dias, onde a gente vai juntar toda essa turma que está ali e de uma forma super prática a gente vai cada vez mais ensinar o empreendedor a ter sucesso. Então a gente queria divulgar a todos vocês. O pedido aqui é ajudem a divulgar, porque é uma ação filantrópica que ajuda o Brasil a dar cada vez mais certo, tá? Então todos vocês estão convidados. Aqui o QR Code, e eu acho que quem baixar o QR Code agora, Cris, tem um desconto de 25%, é isso?
Até às 23h59 do sábado, quando encerra a Expert aqui.
Turma, contamos com vocês, tá? Muito obrigado.
Gente. Abraço.
Peraí. Já que quebramos protocolo, você falou que tem 40 embaixadores. Mais ou menos. João Adib, quem mais? Jorge Paulo Leman, Sucupira. Mas eu acho que para todo, Cris, todo empreendedor, toda empreendedora que queira vender seu sonho, apresentar seu serviço, transformar a vida de tantas pessoas e de si mesmo, precisa uma coisa fundamental: comunicação e oratória. Não é? Cara, eu acho que cabe 41 embaixadores. Será que não?
Tá convocado já, hein, Cris?
100% convocado. O Otaviano Costa aí estará conosco lá.
Aqui, pode contar comigo.
Legal.
Para eu poder colaborar, trazendo meu conhecimento de comunicação oratória para transformar a vida de vocês, ganharem conhecimento, então pode contar.
O que a gente mais faz, tá? A gente conseguiu mapear as principais dores que os empreendedores têm. Contratação de pessoas, um plano sólido de negócio, como é que eu defino meta, como é que eu mando gente embora, enfim, são as dores, e a proposta do Instituto é justamente, de forma muito prática, ajudar esse empreendedor a encontrar soluções que permita ele continuar crescendo a sua empresa e ter cada vez mais sucesso. É um barato, turma.
Os melhores experts em todos esses temas, desafios de gestão de gente, de finanças, de vendas, enfim. A gente traz só o que tem de melhor, empreendedor que já fez, gente que já executou na prática. Não é diferente do teu caso. Né?
Não. Um pedido simples aqui. Sigam o Instituto no Instagram, que é
Instituto B55.
Instituto B55, tá? Então quero sair daqui, voltar lá e ter 10 mil novos seguidores, tá, turma?
Vambora!
Obrigado.
E pode contar, mentor Otaviano Costa, comunicação oratória, junto com o Instituto, ajudando você, empreendedor e empreendedora, a falar em público, vendendo seu sonho e serviço e transformando a sua própria vida. Fechou.
Obrigado, Otaviano.
Obrigado, Gui. Valeu, obrigado você. Muito bom. É isso, gente! Coisas boas acontecem nesse palco, mas mais do que isso, eu gosto quando acontecem momentos históricos. E o que vem agora é desses momentos que você conta para o seu neto ou para sua neta que você fez parte. Política monetária, inflação, déficit fiscal, tarifas, o papel do dólar no mundo. Mas vai mais, vai além. Tudo isso passou pelas mãos da nossa próxima convidada. Ela é uma das mentes econômicas mais brilhantes e influentes do planeta. E para não perder nada do que será dito, eu sugiro, quem precisar, que use o fone de tradução que está na sua cadeira. Confirme aí, por favor, e prepare-se. Porque para conduzir essa conversa, que eu já considero épica para esses 25 anos da XP, eu convido ao palco ele que é o economista-chefe da XP, Caio Megale. Bem-vindo, Caio. Vem comigo que eu trago o Caio para vocês aqui, ó.
Obrigado, Otaviano, pela introdução. Boa tarde a todos, é um super prazer estar aqui em mais uma Expert, esse momento maravilhoso aqui, esse palco espetacular. E vamos falar de temas super importantes, vamos falar de economia internacional, vamos falar de juros, vamos falar de política fiscal, vamos falar de tarifas. E para fazer esse papo aqui com a gente, como o Otaviano estava falando, a gente tem ninguém mais nem ninguém menos do que Janet Yellen. Janet Yellen foi economista-chefe da Casa Branca, depois presidente do Fed, o maior banco central do mundo, e depois secretária do Tesouro, que é o ministro da Fazenda dos Estados Unidos. Só isso. Só isso. E ela é espetacular, super carinhosa, super cativante e uma mente muito bacana. Vocês vão adorar o papo que a gente vai fazer. A gente vai fazer o papo em inglês, mas tem tradução aqui para quem precisa. Então, para mim é uma honra, nesse momento histórico, chamar ao palco Janet Yellen. Ms. Yellen, thank you very much for being with us today. It's really a dream coming true. Since I joined XP 6 years ago, we've been dreaming about having you here with us, someone that took the most important jobs that an economist could dream of taking. So thank you very much for being here.
Thank you so much for the invitation. This is an absolutely amazing gathering, and it's an honor to take part in it. Looking forward to our conversation.
Very nice, very good, thank you. So let's jump into our themes here, and I will start with inflation and monetary policy. So during your tenure as chairman of the Federal Reserve, the main task at that moment was trying to bring inflation up, really. Inflation was actually too low. And now, especially after pandemics, it's changed. Now, all the central banks in the world and the Federal Reserve as well, they're trying to bring inflation down. How do you see this change? What economic forces have changed that we move from trying to raise inflation and the risk of deflation for the moment that we are living now?
So during the time that I was chair and vice chair, it was after the financial crisis, which had a really devastating effect on the economy. It pushed inflation way down, unemployment rose to close to double digits, and we lowered the Fed funds rate to 0 in December of 2008. And most people at the time in the markets thought maybe a year or so it will stay at 0. Well, the economy didn't recover quickly. It was really badly impacted by the crisis, but also as the years went by with high unemployment, we realized a second thing, which is that the normal level of interest rates, the so-called neutral level of interest rates, had really been drifting down for decades prior to the crisis. And it looked like what's technically called R star, or the normal level of real interest rates, was going to be very low. And that meant it was a struggle. We lowered interest rates to 0. They stayed there for 7 years at 0. And we struggled to find ways to stimulate the economy and worried that inflation expectations would drift down, making it yet harder to get inflation up back to our 2% objective. And that's when we experimented with communications about forward guidance to try to influence market expectations, and also quantitative easing. Well, then the pandemic came along, and in the first year, again, very high unemployment, very low inflation, but then everything changed, and suddenly we're in a world of very substantial supply shocks, huge changes in patterns of spending. People stop spending on services, they start spending on goods. We have shipping bottlenecks, semiconductor shortages, shortages of the kinds of things people want to buy for their homes. And inflation shot up more than any of us expected. And really, the Fed has never, it's been a series of supply shocks, and the Fed has never succeeded in getting back to 2% inflation. As the shocks from the pandemic began to wash out and it looked like inflation would come down, President Trump imposes enormous tariffs that causes inflation to shoot up.
We're going to talk about them.
Now that should be transitory, something that maybe takes a year or two to get into prices, but then inflation comes down to normal. And just as maybe that's beginning to happen now, that the impact of tariffs is washing out, we have all of the disruptions in the Middle East. And while 2 weeks ago it looked hopeful we'd have a ceasefire, oil prices had come down. The latest inflation readings in the US were very positive. Now, I guess yesterday, oil rose again above $100 a barrel. There seems to be an extension of the hostilities and no obvious end in sight. And so inflation is likely to, another supply shock, inflation is likely to stay elevated for at least the next year or more. And then a further thing we're seeing, I think I would view it as a supply shock as well, is that the huge build out that's taking place of data centers for AI has caused a surge in demand for semiconductors and electricity. That's again pushing prices in those sectors up. It's filtered through to consumer electronics. iPhones have risen in price.
Everything.
It's going to have more effects. So now we're looking at 5 years and counting above, with inflation meaningfully higher than the Fed's 2% objective. And while I don't at this point see inflationary pressure coming from the labor market through wages, and amazingly inflationary expectations still seem to be in line with the Fed's target, there is concern that there could be second round effects. So I think some at the Fed in this point, and if I were a voting member, I would be thinking about this, that I would love to be able to wait out these supply shocks, let them fade, inflation will come down. Maybe we don't need to tighten policy more. It would probably damage the labor market. I would still be very worried about upside inflation risk, and I would be watching very carefully inflation expectations. My guess is that for the time being, the Fed is on hold, but I think they're very ready to raise rates. And if this latest round of Middle East turmoil continues or intensified, if I were a betting person, I would bet we would see at least some rate increases meant to contain inflation.
No, this is a very important point, because oil prices are an important input for the Fed and for inflation. And over the last 2 months, we had oil prices at 100, then 70, then back to 80, and it's 100 again. So this is one sort of uncertainty that I would like to hear from you. How to navigate on such shake waters.
Well,
and
yeah.
on top of that, to put another element in the analysis, we have the artificial intelligence productivity shock that may be similar to the shock that we saw when internet came in back on Greenspan days. Those two issues, how would you put in your analysis for the Federal Reserve and monetary policy?
Well, I remember well the second half of the 90s, and I served on the FOMC at the time that Greenspan tried to make the case that even though unemployment was falling in the United States, and it had fallen below levels that most people thought were consistent with stable inflation, they were really worried about upward pressures on inflation. Greenspan argued that productivity growth was increasing, and he just didn't see firms, their profits were high, the cost pressure you would expect maybe to be coming from wages. He didn't see it. He didn't see inflationary pressure. And he thought, you know, they're experiencing an improvement in productivity. It's holding down their costs, and we can let this thing run. And I will always remember the meeting of September of 1996. And I believe that virtually every member of the FOMC thought the right thing was to raise rates. And I was probably the most sympathetic person to Greenspan's argument, and I thought we should raise rates. And he pleaded with the committee not to raise rates. And the productivity data didn't show any improvement in productivity growth. And people really thought he's got some screws loose. But they really respected him, and they said, all right, we'll hold off. And history proved him to be right. And when the statistics got revised, yes, productivity growth had gone up meaningfully, and he was right. And the economy did just great. And I ended up later writing a book called The Fabulous Decade. I mean, unemployment fell to levels we hadn't seen in decades, and inflation was low. And that could happen again. But we're not really seeing evidence yet of any meaningful improvement in aggregate productivity, although AI is clearly having an effect in some sectors. And we're not seeing evidence of disinflationary pressures. And instead, there are another set of influences from AI to the economy that we are seeing play out, and their inflationary impacts. So first, we have this huge investment in artificial intelligence. And that spurt in AI investment, as you mentioned, is pushing up semiconductor prices, it's pushing up electricity prices, it's creating a lot of demand, it's keeping the labor market going strong. And then we've got an enormous boost in consumption spending coming from the stock market, which has just been booming mainly on account of the expectation of future profits. So right now, AI, I think, is demonstrably raising inflation rather than the opposite. So I don't think the Federal Open Market Committee would dream right now of lowering rates because of AI, but maybe over the medium term, over the next couple of years, they would see something that would justify the same sort of things we saw in the second half of the 90s, but not yet.
So more short-term inflation pressures, and then maybe some productivity gains and some relief over time.
Yes.
Still on monetary policy and on the Fed, the new chairman, Kevin Warsh, he just established a couple of task forces in order to try to improve the way that the Fed conducts monetary policy. And in particular, we Brazilians are proud to see Arminio Fraga in one of those task forces. So it's interesting how the Fed is trying to bring experiences for other places. Do you see room for improvements? Where on those task forces you would see more room to discussion, to improvement, maybe on communications? Chairman Warsh has been talking about the dot plots that are the forecasts that the FONC members do. How do you see this new task force and room for improvement?
So since serving on the FOMC, Kevin Warsh has been quite critical of monetary policy and the Fed and how it looks at data, and particularly how it conducts communications and the size of the Fed's balance sheet. And I think it's natural and appropriate that walking in as a new person who has had criticisms of the conduct of policy, he wants to take a fresh look at critical aspects of policy. And many central banks do have outside reviews. Now, the Fed itself is looking and has looked and continually looks at these issues. So thinking about all the things the task forces are doing, this is not something new to the FOMC, but having a group of outsiders, and you mentioned Arminio Fraga's participation, in general, the members of these task forces are well-known experts who are highly respected and whose views, I think, can help Warsh if he wants to make changes and they're recommended by these task forces, can help to give them credibility both internally with the Federal Open Market Committee and externally. So I think this is a reasonable thing to do. Some of the task forces are studying things like inflation, the impact of AI. I don't think there'll be immediate policy relevance, but communications, perhaps there could be changes there that would make communications more effective. Warsh has been very critical of a tool called the dot plot, which is a way of trying to communicate to the public how the members of the committee see the likely trajectory of the economy, GDP growth, unemployment, and inflation, and the monetary policy path, at least over the next couple of years, they think is appropriate in light of that outlook. I think it provides, I have to confess that I chaired the committee that introduced it, so I may have some biases here, but I think it provides useful information to the public. On the other hand, it isn't perfect. For example, you might see two dots. One person thinks it's appropriate to raise the funds rate a lot. The other person, no, doesn't think so. And you think, I'm looking at a hawk and a dove. They have very different views. But when you look at the forecast for the Fed funds rate, you don't know what economic forecast went with it. And it might be that it's just that the person who thinks the funds rate needs to go up a lot, that's somebody who believes inflation's going to stay high and growth is going to be strong. And the person with the low dot doesn't see much need for funds rate. That's a person who thinks inflation's coming right down and the labor market is going to weaken because higher oil prices are going to impact spending negatively. They may just have different views of the economy. So it's hard to really, you can't line up the economic forecast with the policy. That could be changed. Many central banks release a full-blown forecast and different scenarios that show how monetary policy could react to different economic outcomes. There are enhancements in communications, maybe that could make it more effective. So that would be my hope. If they do change things, it will be an improvement.
I tend to agree. I tend to agree that some visibility on at least the degree of uncertainty. Sometimes the dot plot shows the degree of uncertainty that everybody has on the economy. So when they are close together, there's less uncertainty. When they're more spread out, there's more uncertainty. So it's also a way that for us to see how difficult it is, not just for us, but also for the policymakers, isn't it?
Right, right.
I would like to change gears here to the exchange rate. I'd like to talk about the dollar a bit. So there's this discussion on the dollar continuing to be the main currency in the world. So discussions about the so-called American. How do you see the role of the dollar going forward? We saw some depreciation of the dollar recently, but it has to do with market forces. Do you see the dollar losing space on the global transactions and so on, or not? Do you still see dollar continue to be the main currency? And if you have a guess if the dollar is going to strengthen or weaken going forward.
Well, I'm always very reluctant to forecast exchange rates. So I'm not going to do that. But in terms of the role of the dollar globally as a reserve currency, I think gradually we're seeing some erosion at the margin of the dollar's role. It now represents just over 50% of global reserves, and that's down from 70+% at one point. You're seeing an increase in gold held as in central bank reserves. I was involved in 2022 in the decision, which I think was very consequential, that the G7 and some other countries made to freeze Russia's assets after it invaded Ukraine. But it was clear that one of the risks is that countries would worry that it held dollars in reserves, that if they got on the wrong side of the United States, that they could face a similar threat. And I think the increase in gold partly reflects wanting to be less dependent on dollars, where the United States can impose sanctions. But this, there really is no currency that can take the place of the dollar. You have deep liquid markets, the treasury market. There is no other market that has that depth and liquidity, rule of law, institutional backing. You don't really have a single EU or Euro area wide set of bonds that are comparable to the dollar as something that can be held as a reserve. China still has capital controls.
People talk about the yuan taking some space from the dollar, but it is a problem.
It's very marginal at this point. And in terms of transactions, the United States has used sanctions. The fact that the vast share of cross-border transactions involve dollars. If people in Brazil want to buy something from France, most likely they do it by exchanging Brazilian real for dollars and dollars for euros. And so many, I think still over 90% of transactions cross-border are intermediated through the dollar. And the depth of foreign exchange markets that don't involve dollars is very thin. But there are a lot of countries, China, Russia, other countries that have faced sanctions. You're using the financial system. When you use dollars, you're using the US banks and the US Treasury that I headed. We have the ability, a tool. We think it's a lot better than shooting at people, but it's an important sanction to levy against countries that really violate international norms in the way that Russia has with Ukraine or Iran had. And they don't want to be subject to sanctions, and they're looking hard for alternatives and beginning to develop them. So I also see some erosion on that front. But on the other hand, stable coins are growing as a way of making cross-border transactions, and they're largely dollar-based. And that in a way extends the role of the dollar rather than the opposite.
Talking about stable coins and cryptos and so on, where are you on the debate on the regulation on those new currencies, new markets? What the role of the central banks? How do you see that?
Well, stablecoins, to me, stablecoins and cryptocurrencies are quite different because stablecoins are promised to be exchangeable for dollars on a one-to-one basis and are very similar to bank deposits or deposits in money market funds. They purport to be stable valued assets, and any stable valued asset is potentially subject to runs. And the regulation that needs to be in place, I think, on stable coins should be comparable to that we use for money market funds or bank deposits. I think they need full backing. There needs to be supervision to have outside verification that there is backing of those stable coins with safe assets like treasury bills. There needs to be customer protection. And, to the extent that I think there are innovations that could make cross-border payments faster and cheaper. And I think that would be welcome. So I think there is some potential there. Tokenized deposits are an alternative. So this is an area where I think innovation by the private sector is welcome. It could bring benefits, but there also has to be regulation. And if there isn't, and they assume a large enough role in the payment system, we could see real financial stability risks.
Definitely. Thank you. Another change of subject now to your other key role as Secretary of Treasury. How do you see fiscal policy in the US today? We are worried about that dynamics in the US. This is a very familiar subject for us Brazilian. We've been worried about that sustainability in Brazil for ages. So, but in the developed markets, this is something new. And we see the Treasury departments, not only in the US, but in Europe, in Japan, in many emerging markets, going to the markets to raise money for their financial needs. We don't know if the amount of savings in the world will be enough. So how do you see these developments? Do you see this as a risk for the financial system going forward, or for the global economy going forward? How do you see fiscal policy in general?
So that's a great question. I see it as a major problem in the United States. And I think you're right that it's not just the United States, Japan, Europe, other countries face, the UK face fiscal issues as well that are really challenging. There was enough spending in the pandemic that debt to GDP ratios rose meaningfully. In the United States now, the debt to GDP ratio is about 100%, federal debt to GDP. And that is a level that in the past has caused trouble for many, many economies. Now, we were talking before about the era of low inflation. It was also an era of low interest rates, and we thought the level of neutral interest rates was low. What I worry about is not a debt to GDP ratio, but how large a burden interest expenses are. And if interest rates were very low and were going to stay very low, I wouldn't worry so much about the debt path, about the ratio of debt to GDP. But interest rates have risen very meaningfully, and now there's some evidence that the level of neutral or normal interest rates will be higher than pre-pandemic, and it has become a major burden in the United States. So the United States right now has 6% deficit to GDP ratio, which to have a deficit that high, the economy's not in recession, we're a little bit at war, but not in a major way. This is very unusual, and we have underlying problems that are going to continue to expand the deficit if no action is taken. The fundamental problem is one we've known about for a very long time, and it's one that all these other economies face as well, and that is aging populations, and with it, a rise in the ratio of retirees to workers that expands expenditures on pensions like Social Security in the US and medical costs, medical systems as people age. And just because of those forces, if you look out, the US problem is going to worsen. And there's no painless solution. It has to involve some combination of higher taxes, lower pensions, lower support for medical expenses. And all of these things are tremendously unpopular. And you will probably not see anyone run in the next presidential race, either Republican or Democrat in the United States, who's going to say, my agenda is to impose some or all of these forms of pain on the American population at a time when they have said affordability is our most important problem. So I'm not seeing a meaningful effort to deal with this. And unless something is done, the debt to GDP ratio can really rise more rapidly. And, at some point, markets, I believe, will look at this, and especially given the trends, central banks are holding less US Treasury debt. It's more being held by private participants, including hedge funds, and they may demand a higher premium, higher long-term rates to begin to deal with that. So I think that's a problem. Even Japan, Japan has the highest debt to GDP ratio in the world, and they're beginning to see problems as interest rates go up. And now, given the geopolitical risks we have and the changes in defense spending we're seeing in many parts, and energy spending we're seeing in many parts of the world, that exacerbates fiscal issues as well. So I think this is something for investors to keep a close eye on in the years ahead.
Definitely. It put pressure on interest rates globally, and it has an impact on markets, on real economy. So we have problems similar here in Brazil. So sometimes you're talking about the US, I would think that we were talking about Brazil or maybe other countries as well. And I cannot resist in bringing, there is this theory that Alan Blinder, that he established this famous lamppost theory for economic policy, lamppost. And he says that politicians use economists the way that a drunk use a lamppost, for support, not for illumination. So even though we try. So we need some fiscal consolidation globally. So how do you think that we should communicate with the society, with Brazilians, with the Americans, that this is important, all the expenditures are important, lower taxes are important, but fiscal consolidation is also important? How politicians can communicate that to engage the society in a fiscal consolidation?
It's tremendously challenging. We've had a few politicians in the United States who tried to communicate that, and they lost their races very badly. When Clinton was elected president in 1992, he pledged to do something about the deficit, and he did raise taxes and cut spending. He received no Republican votes in Congress for that fiscal consolidation. And
President Clinton.
a number of members, I was at the Council of Economic Advisors in the White House at the time, and Clinton held a party for members of Congress who lost their seats, Democrats who had voted for the fiscal consolidation and been defeated in their elections. And actually, Clinton's daughter, Chelsea, married the son of a woman who was a representative from Pennsylvania, who was the critical vote that got that passed, and she lost her seat in Congress. So they've learned this is hard. On the other hand, in 1997, in Clinton's second term, Newt Gingrich and Clinton decided they would balance the budget. And it had occurred after a lot of fighting over fiscal policy, a couple of shutdowns of the government, arguments about the debt ceiling. They actually shook hands, made an agreement. They did some tough stuff, but it was in a better time. It was easier to do it. And at least for a few years, there were surpluses in the budget. I believe it can be done, but it is politically very, very, very difficult to send that message. But our Social Security fund is scheduled to run out of money in 2031. And unless something is done, there will be about a 20% cut in Social Security payments to retirees. And a lot of people know about that and are very upset about it. And I think they do want to see something done to avoid that. So that may be an opening to try to deal with this really difficult problem.
Definitely. Very, very important for all of us. We have a couple more minutes. So I'd like now to talk a little bit about you. Maybe take a walk on the memory lane.
Sure.
When you were an economic student or a young economist, would you ever imagine that you would fill such an important roles? And what was your aspiration? How was Janet Yellen as a young economist?
So I realized in my first year in college that I kind of fell in love with economics, and I knew it was the right thing for me. My family my parents had lived through the Depression. It made a big impact on them. My father was a family doctor. His patients were mainly blue-collar workers on the Brooklyn docks, lost their jobs, had a lot of problems associated with it. I was interested in unemployment when I took my first economics course, and I thought maybe I'd major in math. So I liked math and analytic thinking. And, it was kind of a eureka experience. I understood about unemployment. I saw there were things that could help. I decided to go to Yale to study with James Tobin, who was a famous and later Nobel Prize winning economist who was a disciple of Keynesian economics in the United States. And he felt strongly that monetary and fiscal policy should be used to improve economic outcomes. And he'd served on the Council of Economic Advisors. And I always wanted to serve in government. But if I'd been asked as I was getting my PhD, what did I expect to do? I never thought I'd be a member of the Council of Economic Advisors, let alone Fed chair or Treasury secretary. But young economists often go for a year to the Council of Economic Advisors. serve there. I thought maybe I could be a senior economist at some point in my career, spend some time there. But then the phone rang in 1994, and I got a call from the Clinton administration asking me, would I be willing to serve as a governor of the Fed? And it was completely out of the blue. It was a total surprise. And I thought, absolutely, I'd love to do it. And I was really fortunate because I had a family that was very supportive of me. My husband's an economist. Now my son's also an economist.
Quite good as well, your husband as an economist.
Yeah.
Her husband is Nobel Prize of Economics.
Well, he's been wonderful and very supportive of my career. And he said, we'll make it work. We'll make it work out, and just say yes. And then somehow one thing led to another, and I loved the jobs. I mean, the policy issues are important, they're critical. Largely, I've served in roles that are not very political, they're more technocratic. The White House role is a little more political, but not terribly political. And I've gotten to work with economists and public servants who are very dedicated to using policy to improve outcomes. I've loved the environment in which people are thinking hard about what can we do to make progress on important societal problems. And I've been really lucky. I mean, the fact that I've been entrusted with these roles, I never in a million years expected to do any of these things, but I've loved it, and I'm honored to have been given these opportunities.
And you did it great. And about your days at the office, and at the Fed, at the Treasury, one or two tough days, tough moments, something that you remember as difficult moments that you have there, one difficult day. What experience could you share with us?
So the worst times were the financial crisis, when it seemed like the entire economy and financial system might implode. And it lasted for quite a while. There were days that were terrifying. The day before Lehman failed, I flew from San Francisco to Washington to participate in an FOMC meeting. I got to Dulles Airport. I took out my phone and I saw there was a call from Bernanke. He said, "It's urgent, call me immediately." And I stopped in the airport and I called him and he said, "We couldn't resolve Lehman, it's going to fail tomorrow. It's going to be a disaster." And we talked about what might happen next and what, if anything, could be done. I decided I would go and support a friend of mine who was participating in a triathlon in California. And it was very hot out there and I wasn't doing it. There was a lot of noise, people yelling support for their friends and the running part of it. And all of a sudden my cell phone goes off. It's Bernanke. Wachovia is failing. We have to get this resolved in the next 24 hours. You need to talk to Wells Fargo. They're a potential bidder. And, I've got all this screaming people yelling support to their friends in this triathlon. I'm looking for a place where I can participate in a conference call with financial regulators. Later, when I was at Treasury, the day that Silicon Valley Bank failed, we were afraid there was going to be a run on the entire banking system. There are a lot of uninsured depositors. There were a lot of losses in a lot of banking institutions. Interest rates had gone up a lot, and the value of some of the mortgage-backed securities and treasuries they held, they're perfectly safe, but their market value had gone way down. so the Silicon Valley Bank wasn't totally unique. And we felt we had systemic risk, and we had to deal with it before the markets opened in Tokyo on Sunday night. And I don't think I got off a Zoom meeting with the other regulators for the next 48 hours, but we did figure out something to do that, thank God, worked. So there've been debt ceiling, went down to the wire. I didn't know if Congress would raise it before we ran out of cash. There've been some tough moments. So.
Tough moments, indeed. But we survive. After all, we survive, and the world goes on, the economy goes on, and we think that we are going on as well this time around with tariff shocks, geopolitical shocks, and so on.
You know, the global economy has been really pretty resilient, and it's gone through a lot. And my hope is that that resilience will continue.
Ms. Yellen, we ran out of time. I would like to thank you very much for our conversations. We could stay the whole day here discussing many different topics on the world economy and many more. But in the name of the whole event, I would like to thank you very much. It was an honor to have you here, and have a safe trip back home.
Thanks so much, and thanks for the invitation to come. I really enjoyed it. Thank you so much.